Hey guys, in this video I'm going to walk you through step-by-step how I trade Strangles in a way where I avoid massive losses. I can do this with almost any size account, and how you can also do it to generate monthly income. By the end of this video, you'll know step-by-step what you need to do to get the same results that I am. So anyways, let's dive into the video. So if we're looking at this, what is a Strangle to start off with? If you've never heard of a Strangle before, simply you're betting that the stock will stay between two levels. So if we're just looking at the market here right now, what can we say? Well, we're like, okay, well look, the market seems to top out around this area. So if I put a line right here, I bet the stock will stay below this. Okay, where do I think the stock will stay above? Well, it looks like it tends to bounce around here, at least it did last time. So I could put a level here. Cool. This is called a Strangle. When you put a bracket up like this, where you think the stock will stay between these two levels, if it does stay between those two levels, then you make money. If it doesn't, then you lose money. But just like any normal trade, you can have take profit levels where you take profit early, and you can also have stop loss levels where if you lose more than you want to, it'll cut you out of the trade. And so a Strangle is really fun and really easy because we're making money by the stock staying within a certain range. And when we do that, we collect money known as time decay. In order to set up a Strangle, you need to sell a call. So the top level will be to sell a call. So you're going to sell a call at a strike price. I think the stock will stay below. Again, I'm getting into these specifics here. Then the bottom here is you're selling a put. So you're selling two options, which means you're collecting money, you're being given money, and as time goes on, you'll just naturally make that money because of time decay. So if that got too confusing or overwhelming, don't worry, I'll slow it down here in a second, but just know as long as the stock stays between the two levels that you picked, you will make money. And so that's how I trade these. These are trades that last typically from a week to roughly 3 weeks. That's our time frame to be in these trades based on our take profit and stop loss levels, and that's exactly how we do it. Now, if you want to know how I actually set up these trades and structure them, here's what you should trade them on. Trade it on SPY, which is SPY. If you trade a Strangle on SPY, it's going to cost you $6,000 to do so in collateral. That's how much money you need to put on this trade. Again, that's going to be a cheaper form, and again, your broker account needs to be enabled for margin. Next, you can also do SPX. If you do one SPX Strangle, oops, that's a Y, SPX, it's going to require that you have $60,000 in margin because SPX is 10 times SPY. Now, again, if you want to do something else, you can do ES Futures, which is what I do. When you do the ES Futures, it requires roughly $6,000 as well, but you're making about the profit as you would on SPX because ES is very leveraged. So anyways, these are what I would trade this strategy on. Now, how do I actually structure the trade? Well, I'm going to give you all these specifics right now, and then I'll explain what each one means and how you can understand it. So number one, we need to do we need to go 45 days out until expiration. If you don't know what this means, don't worry, I'll explain it. 45 DTE. Next, we need to do a 10 delta put is what we're doing, 10 delta put. We need to do a 5 delta call. Don't worry, I'll explain this all in a second. 5 delta call. We need to manage our trade at a 50% profit. So 50% profit. Or we're going to take a 300% stop loss. Now, if you follow these just the way that I'm laying it out, you will have a 93% win rate, but you'll be stuck in a lot of crashes, which I'll show you here in a second. Now, before I explain these numbers, which I'll do here right after this, here is a back test using this exact same criteria. I'm testing it on SPX, but again, this works on SPY and everything else that I just mentioned. So you do a 10 delta put, which basically shows how far away from the stock you're going. And so again, 10, you're going about there, and 5, you're going a bit further away because the market just naturally goes higher, so you want more room to the upside. Anyways, 10 delta and 5 delta. We go 45 days out. We have a 50% max profit and we have a 300% max loss. I take these trades on Tuesdays and Thursdays of every week is what I've been doing recently, as I try to put on these trades at least twice a week. And then again, if we look at this, it performs well. You can see here that we have a $400 profit per trade. We have a 93% win rate and a lot of other amazing factors that you can read here. Now, what we really need to ask about is not how amazing this is and how much money it's made, but what we always need to ask ourselves in any trading scenario is where can this go wrong and where has it gone wrong? So if we look at it, we can look here. We've had a crash in this period where it went from $134,000 in profit all the way down to, what is this? 107. So it lost roughly $40,000 of profit here. Now, what about the 2020 COVID crash? It went from $133,000 of profit all the way down to roughly $40,000. So it lost $100,000 of profit. So obviously these two big crashes would have decimated any trader who was trading Strangles during this period. And that's what we want to avoid. So before I explain this, can we avoid those crashes? Can we avoid things like this, which is the March 2020 crash? Yes, we can avoid major crashes like this. We cannot avoid them all, but we can avoid 90% of crashes by using one simple set of criteria. And that is what I call my trending band indicator. This is essentially or closely resembled by a Bollinger Band indicator, which means that as soon as the market breaks above two standard deviations, so the 200 period moving average, here's an example. If I add the Bollinger Bands and I go into the settings, you can see what this is. A length of 200, a standard deviation of 2.2. Again, this is used to replicate the one that I made. So again, you can see once it breaks above this level, the market has a really high chance of crashing. So what we do is we exit all of our strangle positions when it breaks above. Then we enter 10 delta calls, aka we go out further for 10 delta calls. We profit on the way down, give the market 21 days after crossing below back into this range, 21 days to reset and recenter. Then we'll start trading Strangles again. And that's how we avoid major losses like this. So now we can trade Strangles without the fear of being caught in these massive losses. And again, we're not able to catch every single losing period like this. We would have not caught this because it didn't break above. But again, if we look at this from the market, it wasn't that big of a turn down. It would have hurt your account a bit, but not as massive as something like this. Not only that, you can see here we could have avoided this crash down as well, which happened here, which again dropped almost $30,000 of profits lost, but now you won't have to because you have this band. And again, you can replicate this with the Bollinger Band and indicator using the settings that I just showed you, or you can click the link down below and get access to my indicator to get that, and as well as other trending indicators all in one. You can learn more about that below. Anyways, how do we set up this trade exactly? What does this mean? 45 days until expiration means we're going 45 days out in time. So the current date is December 1st. That means I'm going out in time. So I'm picking a contract that is dated to expire roughly January 15th. That is my target. That's where I'm looking to enter in the trade. Next, I'm going to do a 10 delta put, which means I'm going to go pretty far out or pretty far away from the stock price. At the moment, it's going to be like something like this, and then a 5 delta call is going to be way higher. So it's going to be a lot higher than where this is here. Delta just tells you how far away from the stock a current strike price is based on volatility. So a lot of numbers, but if you're using a broker, it will tell you exactly what the delta is and how to do it. Next, 50% profit. So this means that if I get in a strangle trade and I collect, just for easy numbers, $100, but you're typically collecting a lot more than that, $100. Then once the trade gets down to 50, then I'm going to close that trade because I made my 50% profit. I made 100 to 50, which is a $50 difference. I made my $50 profit. Because again, as a strangle, I'm selling the strangle, so I make money as the price of the strangle drops in price. So again, if it drops down to 50, I take my 50% profit and move on. Now, what about my stop loss, a 300% stop loss? Well, what is 3 times 100? If the strangle starts trading at $300, then I'm going to exit my position. Now, what is my actual loss on this? Well, I got into the trade for $100 and I'm exiting the trade for $300. That means that I'm having an actual realized loss of $200 plus any commissions that I incurred. So that is how we structure the trade. And again, with this, clearly here, even if you don't manage these crazy losses like here and here, you still have a 93% win rate, historically speaking. So if you want a strategy that's more of a set it and forget it, I literally take 5 minutes max to put on these trades twice or 2 of them a week, and then I just hold them until the time hits where I either take profit or I hit my stop loss. And this is how I trade with a very high win rate and collect monthly income on a consistent basis. Now remember, you will need a margin account. You will need a decent amount of money to start trading this, but once you have a good account size built up, this is a great strategy for you. If you want to learn more about the specifics of how I trade options and other things like that, check out my free course linked down below. Enter your email and you'll learn all my option strategies and tips for free. All right, guys, see you in the next video.